All right, here they come. All right, everyone. Well, welcome. Thank you for joining us today. I know we still have quite a few people logging in, but we can go ahead, get a few housekeeping announcements out of the way. I am Amy DeGeorge. I'll be your Zoom host. If you have any questions or troubles with Zoom, please let me know. We are also going to have the chat feature open. There will be no Q&A on this one, just the chat. So if you do have any questions, please go ahead, put it in the chat feature. We'll do our best to answer. And if you would like to turn off the transcript at the bottom of your screen, go ahead and click the live transcript option and then hide subtitle, and then you can turn off that option. If you don't see that, you probably already turned it off in a previous webinar, so you're good to go. Please keep in mind that this is a meeting format, so your microphone and your camera have the option to turn on and off. During the Q&A, you can certainly unmute and you can ask any questions. And if you do want to keep your camera on, we'd love to see your smiling face. So we're going to go ahead and turn this over to Tyler and Ashley and get started.
Thank you, Amy, and hello, everybody. Welcome to another wonderful, exciting session on the provider relief funds. I feel like it's been a long time since we have reconnected with some new news, and honestly, probably because it is. But some pretty big news we have to share, specifically around the reporting portal and all of the changes that go along with it. So that's really what we're going to be covering here today. To some extent, we are going to go with the premise that some of the underlying conditions and terms and previous frequently asked questions are kind of known, but I know there's going to be some that are going to have questions like that. So given the amount of content, again, I think what we're going to try to cover here is really around the portal, the reporting, and what's changed recently that you really need to know about. So to kick it off, I am Tyler Bernier. I am a partner out of Eide Bailey's Oklahoma City office. I work exclusively in the healthcare practice. Prior to April 10th, I primarily focused on audits and consulting. And on that magical day, I found myself swept up into this provider relief fund, assuming that I'd be able to kind of help out and provide some guidance and assistance where needed for the next few months. And look at where we're at. As you see, I think I have my second career locked up through at least 2023. Ashley, you want to do a quick intro?
Sure. My name is Ashley Brandt Duda. I'm a partner in the Fargo office of Eide Bailey, and very similar to Tyler, my background is in the audit realm, but got, I guess, sucked into the provider relief funds, thinking that it would be a good thing to learn and help our clients with. And yes, it's gotten to be quite the process. So hoping today that we can provide some additional guidance and help everyone navigate the new reporting requirements and portal that's been opened up.
So I do realize that I now finally, once again, look more like my picture. That's I hadn't noticed that until now. So for those of you who have followed or seen me recently, I kind of went with the pandemic hairdo. I had hair as long as my daughter's and a beard to match. But when the portal came out, I felt like it was probably about time. That was celebration. It was a milestone. So kind of back to normal. But maybe to kick it off, Ashley, I got a joke for you. Why or how did the barber win the haircutting contest?
I don't know.
He took the shortcut.
Nice. Well, no, I'm glad you brought up the hair though, Tyler, because on the last webinar, so for anyone that was on the last webinar, Tyler was not able to be there. And I did say, don't worry, Tyler will be back. So this is Tyler. He is back. You might not recognize him, but he's here.
So once again, July 1st, the portal has opened and it has swept all of us up and hopefully not all of our money. So that's really what we're planning to cover here is how do you protect what you have to the best you can? What are your next steps? What do you need to plan for? And how can we move forward? Always a disclaimer, right? There has to be a disclaimer. So first off, if you have followed this and followed us and followed anything, you realize that can change almost on a daily basis. So here's what we know today. And in fact, I wouldn't be surprised if we know something different this afternoon. But to the best we can, here's the info we know. Be sure to check for anything new that is posted out to HHS websites, etc. And then obviously, as we talk through things, there are a number of open areas still. So some of them involve legal compliance and other regulatory areas. So if you run into those, definitely seek out that assistance and consultation. All right, let's kick it off. So we are officially at the portal. Some of you have seen this page before in January when they said, hey, it's open, but only to register. Now it's open for real. So here is where you will go. prfreporting.hrsa.gov brings you right to the portal. If you have not yet registered for this, I highly encourage that. Many of you that registered can probably attest that you received the emails as soon as it was open, as well as updates along the way. So getting on that list is important, but it's also the first step. So making sure that you get registered is important. We'll talk through who is required to report. So as long as you meet those thresholds, jump in and get yourself registered. On this main page, I pointed out, because if you notice there in the lower left-hand corner, there's a couple of boxes titled resources. These are important. These are key. These are helpful. This is kind of what we are going off of as we talk through much of this. So on the left-hand side, there's a number of links to the frequently asked questions that we so often reference. Numerous pages of numerous questions dealing with many of the questions you have. Expenses, lost revenues, how is my reporting entity structured? You know, how can I transfer funds? Everything you can think of. And unfortunately, many things that you can also think of are not yet in there, but it changes constantly. So if you open up the FAQs, pay attention to the bottom left-hand corner, that'll show you the latest modified date. July 1st is the last one that we're aware of. The top item there, reporting and auditing requirements. This is kind of the reporting outline. This was released on June 11th, at least the latest update. So this kind of gives a guideline over what you're going to be reporting on. A much shorter and concise version than the next one. On the right-hand side, the reporting user guide. So this is essentially the user guide to help walk through each step as you work through the reporting process. I believe it's 73 pages long. One nice resource within it, about 4 pages of it is the items you'll need to report, pages 7 through 10. So if nothing else, grab that user guide. It will give all the screenshots that we're talking through here, kind of a step-by-step approach. There's still going to be a lot of individualization for your unique circumstance, but it is a relatively helpful user guide. If anybody participated in the HRSA, or should I say the HRSA webinar, or anyone's that will come, they will essentially walk through that to some extent, almost verbatim, unfortunately. But once again, you can kind of see the importance of it. And then finally, the lower right-hand corner, the portal worksheets. So this is an Excel-based worksheet that HHS has put together. It includes information on tracking your expenses, tracking your revenues, tracking the payments you received, and tracking some of the other statistics. So if you want a place to start, that's always a great one because it does have the information you'll need. And as we talk through here, this is going to be, much of this information is going to be required by quarter and potentially broken down into subcategories. So you're going to need a lot more information than you potentially thought that you would originally. Okay, so when do you need to report, or what are the important dates, right? This is probably the biggest impact of the June 11th release. And it's really going to impact us now and going forward all the way into 2023. So the deadline to use your funds and the reporting time period are all based off of when you received payments, that payment receipt date. So the payment receipt date is just that. It is when you officially received the ACH or deposited your check. What was the date of that? Not when you earned the funds or anything else, not when you applied for phase 3, let's say. So officially the date you received the funds. That date, whenever it falls in any of these payment periods, that's going to determine your deadline and also the reporting time period. So a couple things to note here. The covered period, so I say the deadline to use the funds, and you can see them listed in the middle here. The covered period, which is essentially beginning through deadline, right? Covered period for all of these starts at the beginning of the pandemic. And HHS has said, we consider January 1st effectively to be the earliest date we'd expect anyone to use. And as we talk through revenues, that's going to be the earliest date that we will use, January 1st. So if you received funds on April 10th and then no more, you'll still start January 1st and you'll have through June 30th, 2021, which unfortunately passed, to use the funds. If you receive them in July of 2020, again, start at the beginning still, and we'll show some examples of exactly what we're talking about. Deadline to use the funds, December 31st at this point. So everything is based upon that date you received money. The other thing to point out, and you'll see it in the parentheses of that first column there, for actual reporting. So when I said, hey, how do you know if you need to register? How do you know if you need to report, right? So if you received an aggregate of $10,000 or more within any of those periods, that's how you know you're going to need to report. So take any of the payments you received and accumulate them up. Again, just for that period. If it exceeds $10,000, you're going to be required to report. I know a bunch of you are like, all right, I got a huge number of questions. What does this mean in this situation? So let's get into that. Let's figure out what some of this looks like. So before we jump in, actually, a couple things that are really important here. First off, can you request an extension? No. So those deadlines I mentioned are very important. Mark your calendars so that you know that you have the information in and submitted by that deadline date and 11:59 Eastern. I'm hoping nobody wants to stay up till midnight on the last day, but just in case, there you go, you get the option. Just as important, and for many of you on this call, I know this is going to be relevant. If you spent all your payments and you're ready to go, you're like, I want to get this out of my life, please let me be done with it. Can I just start my reporting and get it done now? I fall into period 3, I just want it to be done. Can I do that? Unfortunately, no. HHS has said the reporting periods are very specific and you need to follow the guidance no matter what. So you can't report early. One other piece of information kind of that goes along with that, you may fall into multiple reporting periods. You may have received funds in April, and then in July, and then in January, and that means you have to report 3 times. And so that will be the case for a number of organizations based on the payments that you actually received. So a lot of, these are kind of the key things in my mind. Again, mark calendars, especially if you fall in that second or third reporting period, because we're going to be looking at, March of 2022, September of 2022, March of 2023, that we're pushing out quite a ways for future deadlines. So which payments actually qualify here as we're talking through this $10,000 aggregate level? Anything that was titled a general distribution, and those were often called phase 1, phase 2, phase 3, kind of the general fund payments. Targeted distributions, those specific to COVID-19 high impact, rural, tribal, safety net, skilled nursing facility, the infection control. But the one I want to point out here that's important, and we're going to hit on it again, anybody in the skilled nursing area, the quality incentive payments. These were the monthly payments that you submitted quality data on. And you said, look at our infection rates, any of the things that were requested by HHS. We qualified, we met these quality metrics. You gave us money, I should be good. Unfortunately, that's not the case. So those quality incentive payments fall under the infection control distribution and have to be used for that purpose. I think this is a shock to many. I think a lot of people thought this is free and clear, this is my money, good to go, I have nothing else to worry about. And as we'll see, not only is that not true, but it's actually kind of now its own little unique category when we work through the reporting. So a couple things to consider there. If you're involved in the uninsured or the underinsured patient program, so this is where you can actually bill HHS and get back Medicare rates, that doesn't count for these funds. If you received funds through the RHC COVID-19 testing and or mitigation programs, and we'll kind of talk through a couple of examples there, they don't count, but they will roll into this. And HHS will ask if you did all of your required reporting. So if you receive those, maybe put those off to the side. They're not necessarily provider relief funds, but they do tie in, and we don't want to raise any red flags to have to pay anything back. All right, so let's get through a couple of examples here and see exactly what I'm talking about. So we're going to pick a critical access hospital, right? You received on April 10th this magical deposit that no one had any idea what it was at that point in time. You got $200,000 and you were happy. You're like, wow, that was cool. Didn't even do anything and I got money. And little did you know, all this stuff would transpire. And then in May, you received $3 million because you were part of that rural targeted distribution. So when you thought 200,000 was good, 15 times that, ecstatic. And again, now we're 13, 14 months later. I'm not sure you maybe feel the same way, but money in the account is good nonetheless. So in this circumstance, the entire 3.2 million, add those two together, has a deadline for June 30th, which unfortunately has already passed. It must be reported between July 1st and September 30th. So again, that deadline to report, September 30th, no extensions. Here's another one, dental practice. And whoa, our formatting got off. It threw me off, Ashley. What'd you do? Just kidding. All right, so dentist, they were not generally part of that initial payment because they don't bill Medicare. So HHS opened up this phase 2 and said, dentists, you can now apply. And this specific dental practice received $8,000 as part of this phase 2 distribution in June. And then they applied for phase 3, and they also got another $15,000 in January of 2021. So what does that look like? So that first $8,000, you don't accumulate everything, take that on its own because it's one reporting period. It does not exceed 10,000, so you don't have to report. That is over the 10,000. And that did fall in January of 2021, which means your deadline is now June 22, and your deadline to report is September of 22. And again, you can't start that process before July of 22. So if you're this practice, you are definitely going to be marking your calendar. All right, skilled nursing facility. Hopefully everyone can see down to the bottom, because I fear many of our skilled nursing homes are going to experience the most complex form of this, multiple reporting periods. So let's say on April 10th, again, that magical date, you got $100,000. And then as part of the skilled nursing targeted distribution in May, you got another $250,000. And then in August, you got another $50,000. And then you got some quality incentive payments of $30,000 in October. And then some more in January for $25,000. And I know it's going to be hard to keep these together, so I'm going to try to toggle here quick. So with the first one, you'll notice you received it in April and May, 100 and 250. So as we look through that, combine those together. Those two will have to be reported, and you'll have $350,000 to support with that September deadline. All right, let's go back. So next up, that second time frame in August and October, you got $50,000 and $30,000 respectively. So in this situation, you got $80,000 in that period. So you must report. You have a deadline to use that of December of 21 and a deadline to report of March 22. So finally, you got this last payment in January, $25,000. That means you now have a third period to report. That $25,000 deadline of June of 22 and a reporting deadline of September of 22. So you have 3 separate reporting periods with 3 separate items that you're going to be reporting on. And we'll talk through as we move forward here what that looks like and forward.
Tyler?
Yep.
I'm going to turn off your video. You keep freezing a little bit.
There we go.
Okay, go ahead.
Trying to get back. As I struggle through the screen, I'll talk through what I'm intending to talk through here. So who reports? That's another important component of this. The reporting for the targeted distributions is going to be expenses that are qualifying under that targeted distribution program only. So they must meet the terms and conditions of that program. You can't use lost revenues for this type of payment. And then all of the other, they're called all other PRF payments. So those are all falling under the qualifying expenses or lost revenues. So you can kind of use either for that component. So the key thing here, the infection control, which includes those quality incentive payments, separate from all other PRF. And as we look through the actual reporting, the expenses and the interest you earn on those are also required to be separately reported. So who actually reports as far as the entity level? So if you received a general distribution and let's say you are part of a system and you transferred it up to a parent and down to somebody else, any of those recipients can report on those dollars. A parent can report on the use of all of their subsidiaries' payments. When you get to the targeted distributions, however, and there's numerous of them, and I pointed them out earlier, only the original recipient can report on those funds. So you have to know who received them and how they used them, get that information back to the original recipient, which is normally, again, a subsidiary in a multi-entity company, and that has to be the one that reports on it. So defining these is going to be very important in understanding how you set up your reporting and who actually needs to register and then go in and do the reporting. That's probably about enough out of me. Ashley, you want to take it on from here?
All right, sounds good. Now we'll talk a bit about the actual portal itself when we get into it. So First thing is you will have to create a login. And the important piece here is that for your registration, you can only have one user with a unique email. And so why I say this is important as it rolls into step 2 here is that if you have someone within your organization that is going to be doing the bulk of entering and completing this information, that's the person that you are going to want to have register. Because essentially, every time you log in to do any completing the information within the portal, you will have to enter a unique verification code that has been sent to that email address, and also the session's timeout after 15 minutes. So just keep that in mind as you're determining who in your organization should have access to this. Also, navigating within the portal, you cannot skip ahead steps. You need to go in the designated order that HRSA has established within the portal, but you can return to previous steps and make edits. So important thing here too, make sure that you're saving along the way as you go. You know, if you are working through an area and you need to exit and do something else, make sure you're not just closing out, that you are saving, because certainly don't want to have to go back and have to re-enter information that you've previously done, as there's enough that you need to do already. You'll then be asked some questions regarding your reporting entity. And so essentially what they're looking for here is information regarding if you have any subsidiaries. And so what they've said is to determine if you have any subsidiaries, you can really follow the methodology used to determine if there was a subsidiary within your financial statements. And so if you don't have a true set of full GAAP financial statements, then really just look to see, okay, do we have another entity where we have a majority ownership or greater than 50% to essentially determine that parent subsidiary relationship? And so some of the questions, first one that will be asked is, does the reporting entity have any subsidiaries that are eligible healthcare providers? And so one thing that they've noted here is that even if you have a subsidiary, but it has not received any general distribution or other payments, you still want to answer yes to this question. A few other questions regarding subsidiaries. If you do have any, they'll ask if you have acquired or divested any subsidiaries that are eligible healthcare providers and that have received funds during the period. They will also ask you that if the reporting entity itself is a subsidiary, will the parent entity be reporting on any of those general distribution payments? Because as Tyler said, with those general distribution payments, there is some flexibility regarding who can report. And then were any of the targeted distribution payments transferred to or by a parent entity? And so the targeted distributions, just remember, the reporting does need to stay with the original entity that received them. So long story short, if you have an organization that's not just a standalone one organization and you have some subsidiaries or other things going on, start taking a look at this, because it can be a bit complex to determine what is your reporting entity and who should be reporting on what. So next, within the portal, there will be a section that will come up that will ask you to verify your payments received. And so you can see there, down there, the little green button. You'll have to click on that and it will pop up with a spreadsheet with any payments received. And so very important to go through, check what they have there and make sure that that matches up to what you truly received during the reporting period. If it doesn't match up to what you received during the reporting period, you will want to answer no to this question. If it does, great, answer yes, and you can move on with life. But if it doesn't, you'll want to answer no and add in comments here. And the other piece that they've noted is, unfortunately, you can't just answer no and add in your comments here. You do also have to contact the provider's support line to resolve the dispute with them. So hopefully it works out for everyone, but just please keep this in mind and make sure that this information is correct, as it will be very important moving forward. They will also ask you information regarding single audits. And so this one is very interesting because to date, no provider relief fund single audits have taken place, because they are all based on this reporting, which of course, has not been completed yet. So, but they will be asking you here, not only if you had your provider relief fund payments subject to audit, but also if you were just subject to a single audit for other funds as well. And so definitely with this, if you are not certain, not sure if you should say yes or what has happened, check with your audit firm and they can certainly walk you through what you need to answer there. Also on this screen, there is going to be a table where you need to enter any of your interest earned on the provider relief funds. And so what I mean by that is essentially if you took those funds and you had them invested in an interest-bearing account and earned any interest during the year, you will need to claim that as interest earned. And you'll see on the screens as we move forward how that will flow through and what the impact will be. So after you work through that process, you'll again get a payment summary that will have the different payments that you received. Here's where that interest earned flows through as well. So important thing here is just to double check all of this information. It will also have if you did return any provider relief fund payments, those should also be showing up here. So again, just very important, make sure you're double checking this information so that as you move forward, make sure that everything is correct from the start. You will also have an area where you need to enter other assistance received. And so essentially this would be, your RHC COVID-19 testing funds that will fortunately populate in because they know what that amount is. But really, if you received a PPP loan, any FEMA grants, anything like that. So just really any other assistance, you'll want to make sure that you're entering in this section. So one positive note here, because this was one of those $1 million questions that has pretty much been out there from the beginning is, okay, so if I had other assistance received, such as a PPP loan or other grants, do I have to include those in my lost revenue calculation for purposes of determining lost revenue? And the answer is no. So this was actually a very positive thing. We were very, very excited to see because there are a lot of providers out there that were saying, well, I have lost revenue, but if I have to include my PPP loan, then I don't have lost revenue. So this was finally clarified and really just a great thing to see. Another thing to keep in mind is that this information does need to be reported by quarter. So just something to keep in mind that if you have a spreadsheet, okay, you have the lump sums of these, just making sure that you're breaking that out by quarter as well. As Tyler mentioned, for the RHC COVID-19 testing and the testing and mitigation programs, those funds will not be included within this round of reporting, but you will need to report on those funds and hopefully you've been doing so already, but if not, please check out the rhccovidreporting.com and work through that process because you will need to note through this completion if you have completed that reporting as well. So just want to make sure that you're in compliance. Okay, now I'll turn it back over to Tyler to get into some of the details on the expense reporting.
Perfect. So let's talk through the expenses. Again, there are going to be a lot of various expenses that you can report on. We're not going to cover that because that is a full session unto itself. In fact, we have many of those sessions, so if you are that inquisitive and have a ton of questions around what you can use funds for, what some of the previous guidance is, we do have many of our old recordings out on the Eide Bailey YouTube channel. The easiest route is merely Google YouTube and Eide Bailey, and you'll see that plus all kinds of others on PPP and other programs. This will be out there because it is being recorded, so you can always go back and look. So again, what we're going to cover here is what is HHS looking for? So here's what the screen will actually look like. So this is in a situation where the entity received over $500,000. If you received less than $500,000, you'll just have the two line items that are called general and administrative and healthcare related. So no matter what, you're going to have some disaggregation of the funds. As you can see in that red box in the upper left-hand corner, it will actually pre-populate the amount of the infection control payments, which is the screen we're looking at here, that you need to support through expenses. As I previously mentioned, this can't be used for lost revenues. You gotta support it all, or anything you can't, you're gonna have to pay back. So as you go through, you're gonna have to fill out every one of the boxes. If it's a zero, it's a zero. And as I mentioned, you notice it's by quarter. And as we get to the next reporting period, so this is period 1, when we get to period 2, what you'll notice is it will be 8 columns instead of 6, and it will kind of keep growing. So you'll have a lot of information to input. You're only going to include the amounts that you are claiming for this specific payment. So back to some of those earlier examples, you basically assign the expenses to the payments that you're applying them to. As you enter it, all of the totals, etc., will automatically be calculated and kind of flow through to a summary. So once again, this is the one specific to the infection control distribution. If you do not have that distribution, this won't even show up. You won't even notice it, and you'll probably be like, hey, I thought we talked about this. Where is it? Well, if you didn't get the payment, you don't have to do this reporting. So that's sort of the idea behind the portal and the system, is it knows what you need to do. A couple of key items. So again, relates only to the infection control payment, but does, and I want to remind again, include the quality incentive payments. So those monthly payments where you submitted quality data and got money from HHS, that falls into here and needs to be supported through expenditures. You didn't earn it through the quality, unfortunately. The total value that you enter can't exceed your payments. So we'll talk through some examples, but in this case here, you notice it was $12,334, if I can read that font. You can't submit $15,000 of expenses in here. You'll actually need to make the numbers equal. And since there's no lost revenues, again, any expenses that, or any amounts that don't equal that payment, you'll be required to repay, and we'll talk through that. So here's what the other one looks like. Notice it's almost identical, but it's just called other PRF. So this will lump in all of the rest of your general targeted and remaining distributions into one dollar amount. This is where you report all of those. Again, if you have under $500,000 in total payments received for that period, you're going to see a simplified method. Just the G&A and just the healthcare related. Over 500,000, you're going to see this breakout. So you're going to need to break out your expenditures into these categories. We'll talk through potential for a single audit for the larger organizations, those with over $750,000. It's important when you're filling this out to keep that in mind, because that will ultimately be what is going to be tested through that program. So what you enter here is essentially what you're claiming for this program. All right, so on the expenditure side, a ton of questions, and especially when we hit 6:30, I think this was the only thing I did for 2-3 days. How do I use the funds before the deadline? And it will be as important for those that are hitting the 12/31 deadline in 5 months and the next deadline, etc. So HHS released, luckily and nice for us, on July 1st, which doesn't really help, right? An FAQ that says, okay, if you actually committed to a purchase and you are just back ordered at this point, because there is a ton of back ordered items. I know you have all experienced this, supply chain issues, delivery issues. So if you are dealing with a back ordered item, it can still be considered an eligible expense. It just has to be incurred before the deadline to use the funds, and you follow your normal basis of accounting. Now, in my mind, that kind of answers like a few situations, but not all of them. So questions I've gotten: do we need to actually pay for the amount, or is it truly just an incurred? I don't know. What if we're in the middle of a construction project? We've committed to the project and we're backlogged because they're busy and they can't get the supplies they need, but we're crossing periods. How does that work? I don't know. Again, following your normal basis of accounting, cash accrual or otherwise, you're generally not accruing for any of that. So it would seem like it doesn't, unfortunately, but this is the best they gave us for the cutoff considerations. All right, next up, there is a new section that they tossed out to us. And at first it was kind of like, what are they doing here? What does this even mean? It relates to unreimbursed expenses. So what are we talking about? This is, imagine you have a pool of expenses and you have PPP you're going to use some for and grants, and then you have a bunch that you're saying, hey, we've reported all this to PRF. And now you still have some left over because you've incurred a bunch. This is where you're reporting that. This is essentially kind of a heads up to HHS that you can carry this forward if you have additional payments, or I do believe that there could be additional payments that get distributed. I can't tell what they will be or when they will be. I know in January, when a stimulus bill was passed, there were specific outlines and a number of dollars allocated to this fund for a future distribution that hasn't occurred. And it also earmarked dollars that are repaid. And also on June 11th, they created a period 4 that starts July 1st. So obviously no funds were received by then. So something to keep in mind as we work through all this, you may not just be reporting now, you may be kind of setting yourself up for something in the future. So a shortcut may be an option, but it may not be, depending on your specific situation. The other thing to point out here, as noted in the quote, HRSA expects that any payments would be applied to unreimbursed expenses before you use lost revenue. So you can't kind of say, hey, we're going to use 10,000 of expenses and all of our lost revenues, and then we're going to show this as unreimbursed. You kind of get there anyway, because your lost revenues is going to roll forward, and we'll show what that looks like. But they've kind of made that pretty clear. This should be a blank section if you are planning on using lost revenues. All right, so what do I mean? Let's assume another example. You receive 75,000 as one distribution, 15 as part of another, right? Okay, so you had $14,500 in expenses under the terms and conditions of that infection control. That's something very specific and unique to itself. You also had $110,000 of other PRF eligible expenditures. In this specific situation, you're going to report that $14,500 under the infection control example, and you're going to end up with $500 that you can't support, and that will be required to be repaid, unfortunately. For the other piece, the $110,000 you got, or the $75,000 you got, sorry, the $110,000 of expenses, you're going to report the $75,000 of expenses you are applying to these dollars. That remaining $35,000 is going to go in that unreimbursed expense section. And then again, that can be carried forward to future reporting. It can also be potentially available for, what we call this phase 4 distribution. Example 2.0, here's another version. You got 3 different payments as outlined on here. You have $160,000 of expenditures under the program. Notice there's no infection control, so you're just getting the normal, call it the other PRF. So in this situation, you got $500 and something thousand, $505,000 to be exact, and you only spent $160 in expenditures. So you're going to report that $160 in the expense section. You're going to report zeros in the unreimbursed section. And then you're going to move on to the lost revenues and hopefully have enough to support it. If not, you'll have repayments. Lost revenues. This seems like a good point to let you unveil.
I was just going to say, how did I get to be the lucky one to go through all the lost revenue information? So, okay, lost revenues. We do actually, as much as I joke about it, maybe have some good news on lost revenues for once. So I guess we will take what we can get here. So first off, as Tyler was talking, as you're moving through your reporting, you may have situations where all of your funds were able to essentially be claimed with expenses. You were able to cover all of that. If that is the case, you do not need to go through and report all of this revenue information for lost revenue purposes. You'll really just need to report your 2019 actual and your 2020 actual. So if though, however, you do not have enough expenses, then you will essentially need to go down the lost revenue road. And so there are 3 options available. And for those of you that have been following the Provider Relief Fund and listened to some of our webinars in the past, essentially the 3 options themselves overall have not changed. There's just a few nuances in between that we will talk about. So option one, starting out, is just a comparison of 2019 actual revenue to the covered period. And we'll see in screens essentially what that reporting looks like. But the covered period is going to be, again, starting January 1 of 2020 through whatever the end of your reporting period is. So for this first period, we're talking about June 30th of 2021. Your next option is going to be a comparison to your 2020 budgeted revenue. And so should mention too for all these that this is by quarter, as you will see. A few things with the budget that when the new guidance was released that there are still some questions on that aren't entirely clear. The first one is related to the fact that there is that stipulation out there that the budget must be approved prior to March 27th, 2020 for you to use the budgeted method. Well, this brings about questions first off of, okay, well, that's fine for 2020. We may have had our budget approved prior to March 27th, but what about these first 2 quarters in 2021, or even when we get into the last 2 quarters of 2021 and moving forward? How in the world does that make any sense? The other thing that they've noted within the guidance in a few different places is that they use the 2019 calendar year quarters as a baseline. And so not really sure essentially how they're why they're indicating that you're using 2019 calendar year as a baseline when we're looking at a budgeted amount, but hoping that that's just a typo and that they'll come out and clarify or change that guidance as well, because it's a bit confusing at this point. And then your other option, option 3, is an alternate reasonable methodology. So if you really just feel based on your organization and what's happened that really the comparison to actual or comparison to budget just is not a good indication of your true lost revenue, you can come up with a reasonable methodology to calculate. So just keep in mind that if you do come up with your own reasonable methodology, that you will need to provide a document that says why the methodology is reasonable, why you feel that the losses are attributable to coronavirus and not another source, etc. So if you are going down that road, which may make sense in some cases, just keep in mind that you'll definitely have some additional legwork to put in there. Okay, now perhaps the best question or the most positive thing of the webinar. I guess I shouldn't say maybe the most positive, but one of the new things that HHS finally came out and said, and I guess made a change on, is the question was that if a reporting entity has experienced quarterly patient care revenue losses during some but not all quarters during the period, may the provider relief fund payments be used to cover losses during those quarters only? And the answer is yes. And so we were very excited to see this because this was certainly not the initial stance that HHS took. The first reporting guidance that came out, or as the, I guess, different guidance has been out there and has evolved, but really along the lines, it was really that, okay, no, you need to use your annual reporting period. And so this was actually really great news, and essentially just means that if you have losses in some quarters, you can essentially take those losses, but if you don't have losses in other quarters, it just nets to 0. And we'll take a look at some examples and some slides here to see a bit what this looks like. So first one here, we'll just say we have a critical access hospital, that same critical access hospital we talked about before, received that $200,000 in phase 1, April of 2020, and then received $3 million in May of 2020 as well. So for this particular example, we're going to say that they incurred eligible expenses of $630,000 through June 30th of 2021. So clearly had some eligible expenses, but not enough to cover that full $3.2 million. So in this first example, let's just say that this hospital is going to do a comparison to actual. So the different things that they will need to report, first one is going to be all of your quarterly patient care revenue for 2019, because 2019, if we're doing a comparison to actual, that is the base period. And then you'll also need to report your quarterly revenue for each quarter in 2020, and then also 2021, because remember, we're not just looking at the year, sorry, that Q2 on the second line, that should be 2021, not 2022. But essentially, just we have to go through the entire covered periods. That's why we're covering those first 2 quarters of 2021 as well. And so you can see here, if we just look at Q1, for example, in 2020, the revenue was actually up from 2019. And so for purposes of the lost revenue calculation, that comes through as 0. So again, this was the great change, because previously you would have essentially had an offset that would have taken away some of your other lost revenue. And so as we move through, you can see here that for quarters 2 and 3 of 2020, that this particular critical access hospital did have losses. And so they do not have to offset any future gains. And essentially with this calculation, it gives them total potential lost revenues of the $1,399,000. So when it's all said and done, this hospital is looking at their final results. They have, of course, the 200,000 and the 3 million, but then there is also 11,500 of that interest earned on the funds. So if you remember earlier in the presentation, I said if they have any interest earned, that needs to be reported. Well, not only does that need to be reported, but essentially you need to use that interest earned for the same either lost revenue or expenses. So that brings them to the total shown there. As far as provider relief funds that are supported, they have 630,000 of the eligible expenses, the 1,399,000 of the lost revenue, which brings them to a total of the 2,029,766. And so in this case, unfortunately, the funds supported are less than the funds received. And so this would be a situation where this particular hospital under this reporting methodology would have funds that are required to be repaid. So here's another way of looking at it. So perhaps this, let's say, same hospital decides, okay, we added a service line during 2020. So therefore, it looks like our revenue was up in some cases, but really we still had a lot of lost revenue because our new service line made money and others still lost money. So they're going to move forward and use an alternate methodology. So you can see here, you still enter your 2019, but essentially then for 2020 would estimate what do we truly think our revenue amounts should have been if we utilize this different methodology. And again, just a reminder, if you do go down this road, that you have to report a narrative showing, explaining the methodology, why you think it's reasonable, and why you think those losses are truly attributable to coronavirus. But in this case, you see the hospital was able to pick up some additional lost revenue in Q1 of 2020 and also Q1 of 2021, and had some other increases in Q2 and 3. So they were able to calculate total lost revenues of $2,705,148. So again, same facts at the beginning. The total PRF funds received have not changed, but here you can see because the hospital was able to add those additional lost revenues in, they now have total funds supported of the $3,335,148, which has now actually given them some excess funds that they can carry forward, or excess expenses and lost revenues to carry forward to the next reporting period, and they will not have any amounts that they have to send back. Another question that was out there, because I know we hear this one a lot as well, is, is there a maximum amount of the provider relief fund that can be allocated to lost revenues, or do I have to claim expenses, or can I just claim lost revenues? And so they did clarify that there is not necessarily a maximum or a minimum amount that can be allocated, but you can just essentially put in 0 for your unreimbursed expenses. Big thing to keep in mind here is just if you do potentially, either if you know you have funds to claim in future reporting periods, or if you think you may be getting more funds in the future, it will likely make sense to try to maximize and report as much as you can in each reporting window. But they did clarify if you don't want to go down that road and you would just like to claim, essentially just claim your lost revenue, you can certainly do that. The other thing that was clarified was there was a question out there that, okay, if you have more lost revenue, essentially, than you need to utilize, can that be carried forward and applied against future periods? And again, the answer is yes. So when we're talking covered period for all of these, it's starting at that January 1st of 2020 regardless. So if you have extra lost revenue that does not, essentially you don't have funds for all of that lost revenue, you can carry it forward to future reporting periods. And then just to talk about one period of availability example. And so let's say we have a physician practice here in this case, received $17,000 as part of that phase 1 distribution in April of 2020. They received another $145,000, this time not until January of 2021. In this case, the particular provider, they incurred eligible expenses of $53,000 through June of 2021 and an additional $82,000 through June 30th of 2022. And they calculated lost revenues of $72,000 through that first reporting period, or the June 30th of 2021. And then essentially they had no lost revenue from July 1 through June 30th of 2022. And so I know I went through that a little fast just because I want to make sure that we stay on track with time here, but there is a link to the slides out there as well. So please, I know we're throwing a lot of numbers around, but please feel free to take a look at these later, and work through the different numbers as well. So in this case, for reporting period 1, what they would report is they, of course, received the $17,000 during that first reporting period. So that is, essentially what they would have to report there. They did have enough expenses to cover that full $17,000. So in this case, they would report $17,000 of the eligible provider relief fund expenses, but they also had additional expenses in that reporting period that they did not need to utilize. So that those would go into that unreimbursed expenses category. This would be a case because there were more than enough expenses to cover the funds received, where they will not need to report all of that extensive revenue information for their period 1 reporting. They can just do the 2020 to 2019 comparison. For reporting period 2, in this case, no reporting is required because they did not receive any funds from July 1 of 2020 through December 31st of 2020. In reporting period 3, this is where they received that second big payment of the $145,000. So here, they had eligible provider relief fund expenses of the $118,000 and essentially lost revenues of the $72,000 make up the rest so that they can claim that full amount. And then essentially for reporting period 4, because the lost revenues of the $72,000 were really higher than they needed, they now have an extra $45,000 of lost revenue available that, should they receive a future distribution or something, that can continue to be carried forward. Just want to quickly show you the slides here, and these are in the reporting guide as well. But if you do report under option 1, which is the comparison of actual to 2019, you can see here where you have to report by quarter, and also keep in mind that you need to report by payer as well. Option 2, this is that budget option that I talked about. And so you can see here where there are going to be tabs for your 2020 budgeted, 2020 actual, 2021 budgeted, and 2021 actual. There are also the green buttons at the bottom, and this is where you will need to upload your 2020 budget that's approved prior to March 27th, and also an attestation from your management level individual, noting that the budget was approved prior to that time. You will see no buttons for the 2021 budget. So as I mentioned, that, I guess, unusual item of how are they going to deal with that future budgets not being approved in that time frame. And then option 3, you can see here, this is that alternate methodology. So if you decide to do something different, you can see where you need to enter your quarterly revenue, and also they have the upload buttons for, again, the narrative explaining why it's reasonable, talking through the methodology, and then just your calculation of lost revenue and anything else that you need to include as well. So the other question that was clarified is because, okay, we have this potential alternate methodology out there. how will an entity know if HRSA determines that this methodology that they've selected is reasonable? And so what they've noted, unfortunately, have not given a time frame for when they'll look at these things, but they have noted that HRSA will review and determine if a methodology is reasonable or not. And if it's not, they will let you know. Once they have reported, or once they have notified you that your methodology is not reasonable, you will have 30 days to then either resubmit your lost revenue using either the comparison to actual or comparison to budget. So I guess that's a good thing, in that you'll at least have another chance should your alternate methodology be rejected. Okay, so now I'm going to turn it back over to Tyler to just run through some last items.
All right. Appreciate it, Ashley. I think that was the important one. Like you said, that change to the quarterly treatment of lost revenues is very important. So as you can see, when you get all the way done, you're working through your blue bars, you get to the summary page. This is where I would stop and at least step back and say, is all of this correct? Because this is ultimately what you are going to conclude on for that reporting period. If you have a single audit, this is going to be the base for that testing. If you have funds remaining, it's going to be amounts that you have to repay. So all of it needs to be verified. Probably one of the most important pieces of information when you get to the end. And then you think you're done, but no, they want a bunch more information. So here's what you're going to see. First up, you're going to see information on personnel metrics and facility metrics and patient metrics. And you'll see there's numerous tabs and numerous completion points. And once again, of course, they want everything by quarter and all the way back to 2019. So lucky you, you get to go track all of your employment records and facility records, etc. I point this out because be prepared. You're going to have this information available. And you can track it in that Excel tool that I mentioned on the onset. And then they'll have a few other extra questions at the end. They call them survey questions. I was concerned on what they would do here, but they seem pretty easy because they're pre-populated. So things like, did this provider relief fund help you? Yes, no, maybe. And pick out the impacts that you use the funds for. So it should be pretty quick and easy, not as bad as that statistical section. If you can't support all your funds, first off, as I said, ensure that everything you entered into the portal is accurate. You can make some entry errors, and that can mean a lot. Second, perform an additional analysis. Figure out if you have other expenditures, things hiding that you didn't consider before, or maybe you can utilize the option 2 or 3 revenue approach and look for some other opportunities. If not, and I do think a number of you might fall into this bucket, you will have to return any unused funds. There'll be a mechanism to repay them, and they're due within 30 calendar days at the end of that period of reporting. Some final comments. So are they going to tell you that they agree with your report and that you're good to go? No. I consider this like a tax return. You'll file and complete your return, this report, and then it will sit out there, and you'll never know until they decide to audit you. So think of it like a tax return, treat it like a tax return. The data retention policy is 3 years from the date of your report, not the date of expenditure. So make sure that you're retaining all of your documents. So questions, I know we tried to keep up as we went through. We knew this was going to be a jam-packed presentation, and of course it was. Luckily, we hit our time. So if you have anything, feel free to reach out to Ashley or I. We also have a specific email address set up where we are utilizing it to respond or provide assistance to individuals or organizations as they work through this process. It is prf@eidebailey.com. So think provider relief funds, prf@eidebailey.com. Any requests for assistance, etc., feel free to submit it. We'll get back to you. Once again, this is recorded, so the recording will be available, the link will be available, and all of this, along with, again, a ton of other good content on PPP, employee retention credits, etc., is out on the Eide Bailey YouTube channel. So check it out if you didn't. I appreciate everyone's involvement. I know there's a million other questions. We'll see if we can get another thing scheduled to try to answer some. But with that, any other closing comments, Ashley?
No, I think you pretty much nailed it. I know there are some questions in the chat that we did not get to just in the interest of time, but as Tyler said, please feel free, shoot them over to us, or even better to that prf@eidebailey.com, and we will get them answered for you.
Amy, anything else that you have from your end?
No, but that's it. So thank you, Ashley. Thank you, Tyler. Thank you all so much for attending, and watch for your email. We will send out that recording link soon. Have a great day, everyone.
Thank you.